Are you an analyst? I forgot.
I'm not anymore. I used to be,
Oh,
um,
gotcha.
but I kind of took a step back because we got a lot of alerting going on, and somebody needed to manage the server, so I kind of jumped in and helped out with that.
Gotcha.
So I mainly manage the support team, and um,
You're still an analyst in my book, man.
I'm one of the originals. So
Yeah, yes, sir.
OG.
anybody in here new to the server, new to trading?
I mean, I joined at the end of November. I don't think I'm new now.
I'm new. I joined just this weekend.
Hey, who is that?
This is Ubby.
Is that Rodo P JIV or what's your name?
It's Ubby.
Oh, my bad. I see. Well, welcome, brother.
Thank you. Who's that?
Ramsey. You see my name?
Yep.
Hey, Hostile, I have a question regarding selling premium.
Okay.
So if I wanted to sell premium, I know I have to have the money just in case I get the shares handed to me. Could that money be in another stock for the time being, or does it have to be in buying power?
Has to be in buying power. Well, let me rephrase that. Now, what type of strategy are you talking about first? Talking about
I
cash
was
secured puts?
Yes, exactly. Cash secured puts.
So before you get into the trade, you got to have the buying power. So
To
you won't
buy
even be able
100
to,
shares, to buy 100 shares at that price, right?
correct. Yeah, you won't even be able to enter a cash secured put play without having the cash there.
Nice. And then that cash would then be locked up, right? It won't be buying power anymore.
Correct.
Good. That way, like, you won't get kind of screwed over if something was to happen, or like if you get handed those shares, right? The money's already locked away.
That's correct.
Nice. Thanks, man. I'm really looking forward to starting selling premium. I've been really just buying options, calls mostly, and I want to kind of diversify. I feel like you guys been really killing that tab.
Yeah, man, it's a win-win in my opinion. I mean, like I got one it's kind of going against me here and there. It kind of goes in green, goes red, goes green. I mean, I'm in the money. I'm not worried about it because I can roll the contract indefinitely and I can roll it down indefinitely. So, I take in, as long as I can take in a credit every time I roll it, I'm just adding to the profits. And at some point, it's going to go above the price that it's at and expire out of the money. And I'm going to keep every dollar that I got paid to hold that contract.
What do you Hustle? What do you think about Laser, bro? It bounced up high and then it went back down today.
Let me see. And by the way, on my tab, I have my YouTube channel stream there so you guys can see what I'm doing.
Oh, that's sick. No way. Also, man, look at Ford. It's at $10.20 a share. Like, I don't think it's hit. Let me see. I don't even think it hit 10 in the last year.
I think PLTR is in a squeeze. It's going to jump tomorrow.
Yeah, it looks like it's doing good aftermarket. $1.67 up. But it says Palantir downgraded to sell by Citi. Citi says it's time to sell. Ah, get out of here, man.
I don't believe
Yeah,
anything
Ark
these
Ark
analysts
ended
say.
up buying it.
Shouldn't Biden's news about Biden adding $1,400 payments, additional payments, shouldn't that make the market go up tomorrow?
What was it?
Because Biden just announced that He's gonna do a 1,400 additional payment on top of the 600 that was already given.
I mean, I think that's going to be a positive thing for the market. I mean, just like last time they had stimulus, made the market go up.
Right. I
But
just read this today. I'm saying,
I think it's short term, to be honest with you.
yeah.
We're due for a bearish pullback.
I need the market to go how it was in March, man, so I can hop in and just go crazy. Man, Poshmark went up 150% today.
Poshmark would have been a really good buy opportunity.
Yep, but of course, we missed out. But you know what? It actually just listed on January today, this morning.
Yeah, it's pretty early. I wonder if we could trade options on it right now.
No, it won't let you. I mean, at least on
Can't do
Robin.
options after hours.
No. I know, but I'm saying it doesn't even let me see like the options at all. It just says buy or sell.
It's just probably so new they won't let you do options on it.
It's usually when the stock first gets listed, I'm not able to do it for at least 3 days on options.
What's cracking?
DDD looks good today too, man. Jesus,
Exhaust.
36%.
All right, guys. Let's keep the questions going. Let's chatter. Unless nobody has questions, then we can just wrap up the Q&A.
Actually, I have a question.
Okay.
So, how do you guys find like winning stocks to trade on?
How do we find what kind of stocks?
Like winning stocks that goes up?
It's kind of a hard question, I feel like.
Nothing just goes up. There's always something that retraces. Everything is always up and down. Long term, everything goes up.
Support
But
levels and resistance, I feel like also, they play a factor in determining it.
Okay, thanks.
Hey guys, I have a question about credit and debit spread. So, do we get the call? Do we get the call if suppose I bought a 350 or 360 credit spread or debit spread, and if it rises above 360, will I be getting a call if I'm selling like 360 call?
so, do you understand what a spread is? Because you're talking about just a call when a spread is two positions.
Yes. So if I bought like 350 call and I'm selling a 360 call,
Okay.
and suppose the stock price is right now 340 and it is like expiring in 2 weeks, and suddenly the price jumped up to 370 next week. So what are the chances of getting me, getting assigned?
You won't get assigned. You'll just be at max profit potentially. When a trade goes in your favor, you won't be assigned. You can have the option to exercise, but when you get into a spread, you don't want to exercise. You want to take the max profits that you allotted to yourself. So when you get into spreads, you automatically cap your profits. Does that make sense?
Yeah.
Yeah, that makes. I just had that fear because I'm selling a call. So I mean, somewhere I read it, I was not having that clarity. So someone wrote it like you might be getting assigned. So I stopped doing this spread thing.
Yeah, I need laser to
Okay.
run them, man.
It's because you'll sell and take profits before it's gonna expire. They're not gonna.
Hey, Hostel, do you ever look at CLSK or no?
Not. I mean, whenever somebody asks me to.
Okay.
But it's not something that I follow myself.
Gotcha.
It's at support.
I think it's gonna break out tomorrow. Always, whenever it hits this level right here, it always jumps up, back up to 40.
Let's hit that level twice. Looks like.
What the 3570 or what?
Yeah. Looking at the chart here, it's only been up there for 2 weeks maybe.
Yeah, I see that too. Since like what not even 2 weeks. Yeah, not even 2 weeks, like 10 days.
Aki, did I answer your question? I'm sorry if not sure.
No, you answered my question. I was just thinking, so it's safe for me to play because it's already risk covered. I mean, the spreads are already less riskier than naked calls or puts.
It's
So
Well,
it's confusing because the one leg is in the you're losing, the one you're selling. So it's like he's asking how is that not getting assigned while his other leg is in profit.
so the direction as far as are you buying or selling a position, right? If you're buying a position and it goes in your favor, then you're making profits based off of the two positions that you open because one is benefiting over the other, right? So if I'm selling a credit spread and it goes in my favor, then I'm benefiting one of those. The short put is benefiting over the long call, or sorry. Okay, so there's a short and there's a long position, right? So when you short, you're basically selling it, and when you're long, you're basically buying it, right? So with a debit spread, you're buying the shortest number and you're going long on the furthest. Right?
On the call, you mean? It's short on the put and long on the call.
No, it's not a put and a call. It's a directional play, right? So let's say the stock price is at 30 and you're buying a debit spread at $33 and $35. The 33 is your bought position, right? So that's the one that you need to go in the money. And
Right.
when it goes in the money, it's making more. So let's say the stock goes to $36. The 33 is making more than you're losing on the 35, right?
But
So
how is it not assigned? Like how is the sold call not assigned? If it's
because you're
the
making more on the shorter position, right? The 33.
No,
So
I
you
understand that
you
part. I'm
bought
saying
that.
how is the person that bought the call from you not, they could potentially exercise that is what I'm saying.
Stop. Can you hear me?
Yeah, I can hear you, FaZe. So the person that buys the call from you, they're losing. So they're not going to exercise it. Does that make
The
sense?
strike is above the sold call is what I'm saying because you bought a spread.
So if you buy a $33 strike and you sell the 35 and it goes to 36, the
Stop. Can
person
you
you
hear me?
sold, yes, I can hear you, FaZe. Let me start over. The $33 strike that you buy, the $35 that you sell, if the price goes to 36, the person that bought the 35 from you is losing. They're not going to exercise that position. It's a 100% chance they do not exercise. No one wants to exercise at a loss. Would you?
I just
So what about if? Sorry to cut you off. What about suppose drastically the stock is there's a short squeeze and stock went up to 40. Will there be any chance of getting assigned?
No, because again, no one's going to exercise a losing position, right? And with that being the case, the bought position that you purchased lower than the one you sold is outweighing the value of the loss. You're still winning by a lot. Does that make sense?
Yeah,
I'm
it
just
makes sense. Thank
confused
you
because
so
if
much.
someone buys your call that you're selling and the price goes above the oh they are losing then, huh? Right? No, they would be buying
Yes.
a call. It's just like you buying the call.
No.
Hey, hostile FaZe is here.
FaZe, can you hear me?
I can. Now I can.
You said you're like, hey, can you hear me like 3 times? And I'm like, yes.
I'm like, no, I can't hear anything. Sorry, it sounded like you guys were talking some settling premium here.
Yeah, so here's the thing. With somebody buying a position from you, you don't know what their intentions are, if it's a hedge or if they're going long, right? You have no idea, right? All you know is the position that you sold, right? When you compare it to the one that you purchased, you're winning on that position.
Yeah, I get you make more money. I'm just talking about the exercising or getting assigned. But
So,
most people would take their profits anyway on the contract instead of getting the
but
shares.
not necessarily. How many times have we seen Tilio say, "Hey, if this doesn't go my way, I'll let it expire worthless." And that's just with retail investors. Don't think about retail investors. Think about institutional investors. Many of those institutional investors aren't really thinking about, "Oh, I'm just going to make a quick flip on the premium." They buy at the money calls with an anticipation of owning shares. They sell at the money puts to pick up more shares. So their thoughts from an institutional perspective, institutions on average, I'm not saying that they don't buy calls and they don't buy puts, but majority of their work is done through selling options to either add more shares or collect or sell their shares at a higher price, or it's through shares themselves.
So it's just like
So
insurance too, right? Like they're just
ex-
it's all
Yes.
based
that's
around shares.
that's
Yes.
exactly what that's how I describe
Yeah, that
selling
makes sense.
premium. Selling premium is no different than being an insurance salesman. You own 100 shares of Palantir. You picked up Palantir at $10. Today, Palantir is trading at around $25. Now, you want to protect your investment. You say, you know what? I'm going to buy a put at $25. That way, at $25. That way, if the shares drop below 25, I can exercise that put and I can sell those shares for $25 to someone else. And I've collected my profits. If it keeps going higher, so be it. I'm glad with it going higher. But if not, then I'm going to buy that put just as an insurance policy.
Yeah, it makes sense. That's like the whole purpose of them in the first place.
Exactly. Remember,
and that's what a spread is in a way, is insurance.
Mm-hmm.
Yeah,
Absolutely.
you're covering yourself.
Yeah.
So when I sell options, when I sell a put, I'm taking on an obligation. Think about this from a fundamental perspective. What is buying a call and what is selling a call? When you buy a call, you are saying that I have the right to purchase shares of a stock price at the strike that I've selected. I have the right to purchase shares. So if it goes in the money, at that point, I can say, you know what? I want to exercise my call and I'm going to buy 100 shares of this stock at the strike price I selected. As a seller, I have an obligation. My obligation.
You're required.
Mm-hmm. I am required. I'm signing a contract stating that if that option stays in the money at expiration, I am obligated to purchase those shares at the strike price I selected. I do not have a choice. So for that reason, because I don't have a choice, I get paid a premium up front. And that premium up front lowers my break-even cost. Now, what most people don't realize is that when I sell an option, theta is working for me. Whereas when you buy an option, every day that stock does not move or trade sideways or it goes further down, theta is hurting you. Whereas to me, that theta works for me. So 9 times out of 10, a stock could stay sideways. It could even go in the money. As long as the stock price stays above my break-even price, which is the strike minus the credit received, I will still see profitability at expiration.
Now, let me explain one thing with spreads, with all that having just been said, right? So the bought position that you purchased, right, it has an unlimited amount of profit available, whereas the sold position, it's maxed. So you sold it at a certain price, it's maxed, right? So when the price goes beyond both strikes in favor of the bought position, the unlimited position, it outweighs the sold position, right? It's still not an unlimited position for the simple fact that you have two positions that are kind of against each other, but the value of the shorter one, or the one closer to the strike in the debit spread is going to give you more than the loss of the one that's further away that you sold when the stock price goes well beyond that. And as FaZe was saying, not everybody wants to exercise, right? And
Yeah, that makes sense.
this is one reason why you look for a lot of open interest, because there's basically a queue. So when you get into a spread, for example, you've got two positions basically, and each position has a certain amount of open interest, right? So in that scenario, you could be assigned one or the other, right? If that makes sense. But if there's a lot of open interest, then the chances of your assignment are low based off of when you got into that position and how far in the money you are, right? So, and if you also have to look into extrinsic value, right? How much is the extrinsic value compared to the two positions? That's complicated to understand, but there is if you look on the selling premium channel in the pin tabs or tab, there's an article that discusses extrinsic value and how you get assigned on some of these positions. Right? It's a little
Extrinsic
complicated.
value. Well, I mean, to summarize it, and I do highly recommend going out and reading that article, but extrinsic and intrinsic value can be very easily understood as the in the moneyness of that option, right? So extrinsic is all time value. So anytime you buy a stock, an option that is 15 strikes out of the money, all you're paying is extrinsic value. And so that extrinsic value is determined by the amount of time on the contract as well as the volatility, the implied volatility. That's why as an option seller, we rarely want to be in the money when we sell an option, because 9 times out of 10, when we're in the money, we're not collecting extrinsic value. We're collecting extrinsic and intrinsic. So if I'm 2 points in the money and I'm collecting $3 in premium, I'm only collecting $1 of time value, and I'm collecting $2 of intrinsic value. I don't want that as an option seller. I want all extrinsic value, which is why it's best to be out of the money. As an option buyer, for you, it makes more sense to buy closer to at the money or in the money, because then you're actually purchasing intrinsic value. Again, you have the right to buy those shares. If you break it down from that perspective, from that very fundamental knowledge of I have a right to buy shares. And so when you're at the money, your delta is higher, your theta is lower, your the IV doesn't matter as much. And so as the stock moves up or down based on the position that you've taken, you're going to see that your option contract moves more to a point where you can be so far in the money that your delta is now a 1.0, meaning for every 1 point the stock moves, your option contract moves $100 because you have all intrinsic value at that point. You'll
Yeah, you're
find
controlling
that many
100
times,
shares, or you're not
exactly.
controlling it, but
No, that's exactly what you're doing. You have ownership. In essence, you are fully in ownership of 100 shares. Whereas you'll find that, when you have a stock like Palantir that has 135% IV, and you've bought an option that's a 32 call, the stock may move 2 points, but your option has only moved $15. Why? It's because you only have extrinsic value, and IV is working against you.
This is why IV is so important to understand, so that when you get into a position, you're putting yourself in a higher probability position to see profits. Even if the stock goes against you, if it's got, let's say you get into it and it's got a 10 IV, and you get into it and it loses 2 points, but your IV goes up to 75, I guarantee you see profits.
Absolutely.
yeah, I try to get in at low
In fact,
IV, but
I think, in fact, 2 days ago, or was it yesterday? Yesterday, I alerted a CCIV short put, and somebody in trade floor went the opposite and took the CCIV 20 call. On my end, I didn't see any price action. as an option seller, because the IV pumped up when the stock pumped up, my option price barely moved. And that price action was garbage for me. Stock moved up almost 1.5 points. I was only $5 or $7 in profit, when technically I should have been at least $100 in profit based on the delta. But the gentleman who was in trade floor said that he was up almost 70% on his option within a matter of minutes. Why? Because the IV pumped through the roof. IV went up almost 40 or 50% just off the get. The delta was very low, but because IV went up, and that's Vega as part of your Greeks, Vega went up, and for every point that CCIV went up, Vega also increased along with delta, and he saw instant gains.
Did the implied volatility move from more interest, like people buying the contracts, or is it buying the shares, or both?
Volume will always increase. You'll see in your option chain, volume is always ever increasing. OI stays stagnant for one day, and the next day, based on the volume of today, OI will increase the following day. OI is the amount of contracts opened. Volume is the amount of contracts opened that day. Same thing with shares. When we look at volume, and Tilio talks about, hey, we need to break through something with volume. It's when institutions are buying thousands and thousands and hundreds of thousands of shares. That's when we see that spike in volume.
Hey, FaZe, where do you alert? I don't even see you have a tab.
I alert in the selling premium tab.
Selling premium only. Oh, I see.
Yep, that's my tab. And that's, it's a shared tab between Hostile and I. Hostile and I work together.
How have I missed this?
This is all that I do. And I'll tell you guys very honestly, I started off as an option buyer. Now I'll be honest with you. I do have an account size that's larger than most in this Discord. I don't have a large account. I use about $30,000 to $40,000 per month to sell options as leverage. Doesn't mean I actually use $40,000 in cash. I use that money just as leverage.
Yeah, you got to have money to cover it.
Right,
correct.
right. But I feel like you probably do like bigger plays. You don't go for the small ones.
No, not really.
Actually, yeah.
9 times out of 10, I'm looking at $25, $35, and $45 stocks.
Yeah, I actually see that. Laser, BY. Oh, I don't
Have
even
you
know
ever sold on
BYD,
SPY
but-
like every 3 days? Like
No.
how you can kind of.
No.
Kind of cool to do
The
that.
premiums aren't worth it.
Yeah, it's worthless.
Oh, it's not even worth it.
Are you swinging laser phase?
I am. So I have a 30 put on laser.
Oh, you have a 30 put?
Yeah, I have a short 30 put, meaning I am still bullish on the position. Remember, when you have, and I know that people were talking in voice chat today about contradictory plays. This happened the other day when Zabes mentioned open, and I said, oh, I like this play, and I went and did a short put on it. When I do a short put, when I sell a cash secured put, what I am saying is that I will take ownership of those shares at my strike price. For that, I collect a credit. My expectation is that it is going to bounce from a certain level and it's going to go further up. If I sell a call, then I'm taking a bearish position. So selling a put is a bullish position.
Right.
What you guys need to understand is when you're shorting and going long, those are two different types of options, right? Two different sides to the coin. When you go long on something, you're buying that position. When you're going short on something, you're selling it, right? A lot of people confuse, buying puts as shorting something, right? You're not necessarily shorting that because you're not selling that position. You could be bearish on something that doesn't make you short it, right? So there's always confusion on that for some reason, and a lot of people don't understand that concept. Buy to open, sell to close, or sell to open, buy to close, right? FaZe and I do sell to open, buy to close. Tilio, Cal, Zabes, they do buy to open, sell to close. Does that make sense?
Yeah.
Now, all of you guys are doing what I do. I just do it the opposite way. So you guys
Yeah.
buy a call for $20.
You buy
But you
like
see,
a. Oh yeah. Go ahead. Go ahead. I'm sorry.
so when you buy to open, you buy something and you pay a debit of $20. And
Right.
then when you go to sell it, you sell it, and you have a red bar on Thinkorswim. I don't know how it is on Webull. I don't know how it is on Robinhood, but on Thinkorswim, you'll see that when you go to sell something, it's a red bar and it's a credit of, let's say, $50.
Okay.
Right? So you're buying, you have a debit followed by a credit. I do the same thing, but I do it in reverse. When I open my position, I sell for a credit and I buy it back for a debit. So ideally, that's why when I sell a put, I get the credit of, let's say, $300.
Okay.
When I go to close that position, I want to be able to have a debit of less than what I received, because the difference is what I make in profit. So if I have a credit of $3 on sell to open, I want to have a buy to close debit of $150, because the difference is $150 in my pocket. That's my profits.
So
And when you sell to open, 80% of contracts, and this is something that people don't realize, 80% of contracts that are opened expire worthless.
Wow, didn't even know that.
I thought it was 90.
Worthless. It might be 90.
Well,
I
a
don't know.
minimum of 80.
Yeah, it's a fuckload.
Damn, I didn't even know.
I have another question. Do you
Boys, we've
normally
been playing the wrong place.
Do you normally hold your plays till they expire though? I mean, I know you can, but like, or do you just?
I don't.
Okay, so you just get out earlier.
If you go through my tab, you'll see I gave profit alerts at 20%, 15%, at 30%.
Can you explain the difference
50%?
for everyone of
Sure.
those two choices?
Sure. So let's say Beyond. Okay, I opened a put on Beyond last Friday. Okay, I opened a 115 put requiring $11,500 in leverage, stating that if the stock goes below $115 by my expiration date, which was February 19th, I would purchase 100 shares of Beyond for $11,500 at $115 a share. For that position, when I sold to open, I received $7 in credit, $700. So right off the get-go, because I sold somebody an insurance policy on their shares of Beyond, I immediately received $700 in credit, bringing my price, my break-even price, if assigned to shares, was going to be $108 per share. As it is, I'm okay owning the shares. I have no problem buying the shares.
You gotta
getting them at a discount.
You gotta hop in
I
the
get them at a
VC
discount.
during the day one day and walk us through it step by step.
One of these days I will. I work a full-time job, so it's not easy for me to do so. I'm in meetings most of the day.
It's okay.
But one of these days I will. But so
you could watch the video that we made too.
That's true. We have on Hostile's Professor Hostile Educational Video tab. We have created a video on the wheel strategy.
Okay,
I highly recommend you guys utilize it after this session today. I will post it on my tab. So please go visit and watch it. So that's where we are right now. I've sold to open this position. Now, Beyond moved up to $120 in a matter of 2 days. Okay. Now I opened this position on a Friday, Saturday, Sunday, Monday. Beta was like 0.6 or 0.06 or 0.08, meaning immediately 3 days go by, I'm already in profits. If the stock had stayed exactly where it was, I was in profits because theta works for me. And I'm going to see $24 in profit when I come in on Monday. Now, stocks never stay flat. Rarely ever do you see a stock stay flat. So I was in negative for a little bit. Well, we saw that pump to 122 or 123. And I alerted, hey, we've got 15% or we've got 8% profit for $40 or $50. Meaning at that point, you could buy to close that option contract from $7 when you sold to open to $6.50. And you have a $50 profit in your pocket in a matter of 2 days. We hit our first price target of 124 and immediately saw $90 in profit, meaning at that point we could have closed that position for $6.10. Then we saw this huge pump on news, and we got to our next profit target of 136, and I held. I told everybody, hey, we've got 40%, take your profits. At 40%, people were seeing roughly around $4 on sell to open, meaning they already saw $300 in profits. When I closed my position, I had hit my profit target of $143. That's the level I had seen in my mind. Mind you, I saw this off of support and resistance levels. I saw support at 115. I saw resistance at 143. I saw that we had a couple of price targets in between, and we were breaking through with volume. At 144, my contract was now worth $2 versus when I initially opened it up at $7. I closed that position out this morning for a $500 gain in 5 trading days.
Yeah, that makes sense. If you see like a pretty consistent trend in your direction, like your profits, how far will you let it go? Like 50%, or have you seen it go pretty far?
My rule, and you'll see this in my video, my rule is when you see 40 to 50% less than a week, you take it right then and there.
Okay, that makes sense.
I opened up space this on Monday or Tuesday. We opened up a 25 put when it was sitting at support. We received $2 in credit for that. We saw we saw a 1 point move after it hit its support level and volume came in, and we were already at 25% in profits. I said, no, I think it can keep going. I saw resistance at 28.50. Then we get this ARC-X news come out. All of a sudden, we're at $32. I closed my position this morning at open for 0.3, collecting $170 right off the get. At some point, you have to realize that, look.
Yeah, hello. Can you hear me?
Yes, we can hear you.
Yeah, can you hear me?
Yes, we can hear you. Can you guys hear me?
Yep.
Yeah,
Okay.
I don't know why you
Yeah,
said
what's
that.
up, buddy?
At some point, you have to make a realization that, hey, I've received, or I'm at 75% or 60% profit in a short amount of
Is that
time.
MMA Guru?
This is FaZe.
No, that's
Bro,
FaZe.
don't cut him off when he's talking. Like,
Yeah, bro, he's middle of his
try to be
conversation.
mature,
bro.
please.
I'm
All
sorry.
right, guys. No, you're fine. So at some point, you have to make a realization that, hey, I've juiced the premium out of this. I collected 70% in a matter of 3 days. Is it worth me holding this position for another $30 or $40 in profit?
Yeah, that makes sense. You don't want
to for the time that I have allotted to it, because at some point that position is going to start going red again, and I can still collect my 100% premium, even if it goes red, as long as it stays below 20 or above 25 at expiration. But why do I need to? At some point, you have to weigh out your risk to reward.
If you draw it on like the analyst chart, it's a curve. You know what I mean?
Mm-hmm. Absolutely.
It's going to take you longer and longer to get to that 100%.
Mm-hmm. Now,
not only that, the stock has a high potential to reverse at a high price.
Yeah.
Mm-hmm. Now,
so there goes your
I'll
profit.
give you another example. When I do TNA puts, I sell puts on TNA weekly. Right now, I've got a 70 put on TNA. I had received 85% or 80% yesterday or the day before yesterday. It's a 70 put. Stock is sitting at 84 right now. The likelihood of it coming down 14% at 14 points in a day, not high. That's a weekly. The theta alone is going to eat it away. I don't need to close it out. Why should I pay the commissions?
Hey, FaZe, my bad. Real quick, can you unmute Jason? I think he has a question.
Hostile.
Jason with the question mark. Or hostile, if you can do that.
All right.
Jason.
Hey, I love you, hostile, or whoever unmuted me, I love you.
What's up, buddy? What's your question?
Oh no, I was muted for the whole day, and then like no one, I pinned support like twice, and no one did anything.
Oh, I
I'll
thought
be
you had a
honest with you,
question.
bud.
Yeah.
I'll be honest with you, Jason. Support staff has permissions to mute anybody if they see any kind of inappropriate comments being made or anything to that effect.
I'm
so I don't
surprised
know.
I haven't been muted.
I think FaZe, he's talking about voice, not in
voice.
Oh, my fault.
You probably
No,
were
I think
muted because you had a lot of background noise going on.
yeah. It was yesterday, and then like I was in here this morning, and I couldn't even talk. So
Hey, Jason.
thank you. You
So
can keep going. My bad.
Make sure that you mute yourself manually so that you don't get server muted next time.
I gotcha.
So that's that. I'm hoping that helps answer some questions. I'm happy to stick around and answer other questions if you guys have any. But I know a lot of you guys have questions for Hostile specific to charts, specific to certain option plays. So if anybody else has any questions, feel free to ask. I'm here.
Yeah,
If
thank
not,
you.
then I'll let you guys get back to Hostile.
Well, I
Hey,
was gonna
Zach,
ask you,
I
FaZe,
actually have a
before you
question.
go.
Yeah, please.
Do you see Laser moving tomorrow, or do you have a 29 or 22 call for
I
the
have
date?
a short put. I
Oh,
have a
I forgot you said
32
you had a
put.
put.
Yeah, I have a 32 put that expires. Hostile, when's that expire? Like 29th?
29th or the 5th. One of those two.
Yeah, I can't remember which one. Yeah. So for me, as long as Laser stays above 32, I'm happy. I do see Laser moving. It's sitting at a nice support right now. It is squeezing. So at some point it's going to move. I don't buy premium because I can't predict on when it'll move. That's why Tilio and Cal and others buy premium. They see better profits, but they also see losses. I rarely do. Because for me, it's easier for me to predict where a stock won't go, where versus it will go.
This man is a genius.
For
I swear to God, this guy's a genius.
He's
me,
on
man, look,
he's on the good side of probability, actually.
that is absolutely correct.
That's what it's all
He's
about.
he's on the 80%. We're on the fucking 20.
Yeah,
That's
he's
right.
right.
Absolutely
My
correct.
God.
This
That's
is why
absolutely
selling
right.
premium is the way to go.
But you gotta have capital. That's the point.
You
That's the
do.
only
You
hard
do.
part. You
You
gotta have
do.
a lot of money, I feel like.
You do.
You can do it with 20K and higher. Start at 20K.
Yeah,
Hell,
that's
you
sick.
don't even look. I'll be honest with you. 20K is ideal. You don't need 20K. You don't
How
need
about
20K. You could
how
have
about
gotten in my
2K?
CC. You could have gotten in my CCIV put for $1,500, and you would have collected.
My poor
How
ass
much did
could
I
have
get on that
gotten
put?
there.
Like 2.6, 2.6, 2.7 on it.
That would
You
still
would have
YOLO'd
collected
my port.
270. Huh?
It
What's
said
that?
it still would have YOLO'd his port. But see,
Yes,
here's the
can't.
thing though. You got to
You
understand,
You can't.
YOLOing. There is no such thing as YOLOing on a cash secured put,
You
right?
can't.
Because you own the shares if it goes against you, and you can indefinitely roll that position out for premium.
Forever. So I'll give you
Yeah.
another example, guys.
Yeah, the
I'll give
will
you
is sick.
another example. This is no, forget about the wheel.
Yeah,
I'm just talking about going
that's the
the
first
put
half
side,
of the wheel.
selling the
I'm
put.
gonna
Yeah,
watch
just
that
selling
video
the
in a
put.
second.
I'm going to give you one example right now, and this happened to me, and I did this for weeks. I had 2 contracts of work for Slack Technologies. Okay, I had I think it was a 28 put. I had roughly 76 or 77% profit on it. And I was being greedy. Hostile knows this. I was being greedy.
It's all right,
Contract,
man.
I think I sold it for 2.1, 2.2. It was worth like 0.35. And I was being greedy. I said, no, I'm going to close this for 0.30. And it got to 0.31 at the end of the day. I said, no, I'm going to leave this. And in turn, outside of that, I sold another 2 puts, 2 contracts at the 30 strike, thinking, hey, this is going to keep going up. Well, guess what happened the next day?
What?
Some analyst decided to downgrade the stock, and all of a sudden the stock came tumbling down from 31 down to 27. The option that I had yesterday that was for 0.31 at close was all of a sudden worth 2.4.
Wow.
More, I was in negative. I wasn't in positive anymore. I was now negative, down about 20% versus being up like 75%,
Yeah.
85%.
Guess who was
So what did I
screaming
do?
at him to take profit?
Oh, yeah. I heard it. I got a good earful from Hostile. Hostile and I are good buddies, by the way. So I got a good earful, and he let me have it. So you know what I did? I kept rolling these contracts, all 4 contracts for like 6 weeks. What did I do? I would buy to close the position that I had initially opened, and then I would sell to open the same position or a strike lower. In my case, I didn't go a strike lower. I stayed at the same strike for a week or two out, and I collected credit. I received like 30 cents or 40 cents, meaning $30 or $40 per contract every week. And I kept doing this for like 4 or 5 weeks, every single week.
Now,
And
let me
guess
pause
what?
you,
Slack
Faze.
moved.
Wait, let me
Mhm.
pause you before you get to the end. So while he's doing that, guys, he's adding to the initial premium that he initially collected. So he got
Mhm.
what was the premium you collected first?
Let's say
$2.10?
it was $2.
Okay, so he got $2, and then he rolled it for 30 cent, and then 40 cent, and then 30 cent, whatever. That's 90 cents, right? Or 100, or another $1. So now he's up to $3 from rolling.
Mhm.
So
Just from
mind you,
rolling.
instead of being in a buying to open position and just losing, he's adding value to that contract. The only negative part here is your money's tied up. That's it. All right, go ahead, Faze.
Oh, the ending is very sweet and simple. All of a sudden, CRM decided to buy Slack. Slack went through the freaking roof, closed out all my contracts, and now I have 200 shares still at $24 that are now worth $42, which will eventually be worth $2,900 plus 7 shares of CRM each. My point is that
That's sick.
when you sell premium, and a wise man once taught me, wise man is on this call. When you sell premium, you don't lose money. You may lose time, but you will not lose money because you can't. It's an infinite loop.
Now a wise
For the
man told me
rest of
this
my
too.
life. What's that?
I said, now a wise man told me this too.
Well, look, man, you guys are learning from the best. I'll tell you this. I came to this server when the server was less than a week old, back in
Wow.
April of last year. At that point in time, there were 20 people in the server. And at that point in time, I connected with Hostile. And Hostile took an hour and a half one night and taught me everything there was to know about supports levels, resistance levels, and selling premium.
Oh wow, really?
9 months later, I am now able to give alerts and see profitability every single day. You are learning from one of the best people in this server.
Can I ask you something?
Please.
Why?
You guys are both awesome.
Why don't you make this like your day job, like a normal thing for you?
So look, some of these guys like Tilio, they've got enough capital that they can day trade all day long. They can buy 50 contracts, get a a 10-cent pump on their contract and be out for a $500 profit. Boom, boom, no big deal.
Right.
I play with selling premium. It takes a lot more leverage to make a lot less money. My goal is to make 1% of my portfolio per week. So ideally on 30K, I'm trying to make roughly about $300 per week. I
That's
can't
good
survive
money
off
though.
of
That's
that.
still good money.
Can't survive off of it.
No way.
You're gonna tell me $1,200 is gonna pay my bills, is gonna pay for my house, my kids, my wife, and my expenses?
I mean, if you live in the ghetto.
Shit, even in the ghetto, it won't pay for that.
Yeah. Kind of ghetto you living in Philippines?
Like for real.
No, you'll
Like,
be
shit.
good. You'll be good with $1,200 in Detroit, bro. You can get a house for $1,000 out here.
Oh, I know, but still, I mean, it's unreasonable to say that I'm living. Now, granted, I will say that on my 30K per month, I average, and I'm going to post this to show everybody don't bullshit. At the end of the month, I typically see roughly between 15 profit per month.
Say you blurred out. What'd you say?
I said on average on 30K of leverage, I see roughly between $1,500 to $2,000 profit per month.
Who cares? That's good money. Take it.
That's fantastic money.
Well,
not enough.
Here's the other thing. When he gets to 500K, he can easily make $30,000 to $50,000 a month.
Easy, no question about it.
Easy.
Yeah.
Now he can quit his job.
I'm right behind you guys. Hostile and Phase, I'm right behind you.
Hostile, you should join, or you guys should join or I know FaZe, you said you're busy during the day, but you should join the VC if you guys have time during the day. It gets pretty hectic in here.
I'd like to, and I used to. There was a point in time when I used to get in pretty often. It's just not very often for me now.
No, right, I get it. I know you're busy at work.
Well, not only that,
I got
man.
some questions.
Sure, we can start answering questions here in a sec. But not only that, the VC during the day, it's mostly people that are interested in making those $1,000 gains in 5 minutes, right?
But you can convince us the other way. You can change our minds, brother.
Well, that's what these Q&As are for. That's what our premium channel's for. That's what the videos that we make is for. It's not a quick process to convert people. I mean, I've probably converted 5 to 10 people from doing options to swinging shares. I've got Mario 94 now that's converting people from buying options to doing shares. And then everybody that gets into doing the shares and they're making money, now they're coming over to the CSP side with me and FaZe, and they're like, you know what? This is a really good strategy, and we can't lose. My motto is I don't take losses. Period. None. Right? I do not stand for it. So
Yeah.
I mean, everybody can go out there and buy options all they want, but it's at least a 50-50 game of losing.
It's a hit or miss.
Yeah, it's like it's gambling, bro. It's no different than going to MGM and putting 50 on black or 50 on red.
That's absolutely right. Think about it this way: everybody who has a house or who doesn't have car insurance? Everybody has car insurance, right?
Who doesn't? Would you say?
Who doesn't buy car insurance?
Yeah.
Right? Everybody buys car insurance. Now, if you're in the insurance company, you're the guy who has to buy insurance from me. You're a sucker. You're going to pay me $50 or $75 a month every freaking month.
Yeah.
That could be for the next 10 years, and you may never have an accident. Guess what?
I joined pretty late.
Yeah.
Oh, I joined pretty late. Can you explain to the basic of selling premium?
So, in a nutshell, and again, I'm going to post this on my Selling Premium tab. Hostile and I created a video on how to sell premium. But in essence, when you sell premium, if you go back to the fundamentals, you sell an option, you are taking on an obligation to purchase shares at the share price that you or the strike price that you selected. So if I sell a 25 put and my option expires in the money, I have to buy 100 shares at $25.
Yeah.
In turn, because I sell that insurance policy to somebody, that person pays me a credit. That credit could be $2, could be $3, it could be $1, but you're going to pay me a credit. And so that credit is where I get my break even at. If it was $25 and I have to pay $2,500 for 100 shares, and you give me $100 credit, my break even is now $24. So what I was explaining is that as an insurance salesman, and I know Hostile hates that term, but he's going to get used to it.
I'll just mute you.
As an insurance salesman, it's your job to pay your insurance bill every single month, right? Hold on one second, guys. So you pay your insurance every. Now I'm the insurance company. You're the sucker who's paying me every single month.
So you basically
you may never have an accident in your life.
So you're basically selling 100. So you're basically renting out 100 shares.
I'm using leverage. I am using leverage. Who here knows about rental income? When you buy a rental property, you put down a certain amount for the house, and what do? You rent it out to somebody.
And you charge them more, and they pay for the mortgage, and you collect profits.
Exactly. You use your leverage to pay the mortgage. That's what we do here in Selling Premium. All we do is we say, hey, I'll lend out my $2,500. Give me my credit. And when I see my profits, I'm getting out. If I don't see my profits, hey, that's cool. I'll either roll the contract to the next week, or I'll take my assignment and I'll sell calls against it.
So you're telling me so you can execute the contract at any moment?
Somebody else could.
Oh,
so
okay.
The buyer, whoever the buyer of that contract is, and the market maker makes that decision. So if you're a buyer and institution has 25 puts, or sorry, yeah, they bought 25 puts on Palantir, and Palantir's sitting at $24 today. Guess what? I'm going to get exercised on it. And so that buyer decided to exercise his option, and I'm going to get assigned shares. That's cool. I collected a premium in the first place. My break even is lower than 25. My break is 350. Maybe my break even is 2250. I'm going to do is I'm going to sell 23 call. I'm already in the money. What's going to happen? Either the stock's going to keep going, and I've already collected my $300 or $400 premium for selling in the money, or the stock's going to go down. It's going to go below my strike price, and I just collected $300 to make my break even lower.
Can you explain? Can you explain like? Wait, no, never mind. That's opposite.
Jason, ask the question, bro.
Can you just go over the rollover? What'd you do?
So when you roll a contract, what you're doing is you're buying to close your current position. So let's say, for example, this is a current position I have right now. Snap 49 put for for February 5th. I collected $2.30 for the premium. Let's say at expiration, Snap is sitting right around $47. I'm in the money. What can I do? That $2.30 that I collected is now worth $4 and some change. I don't want to take a $130 loss. So what I'm going to do is I'm going to buy that position back for $130, and I'm going to sell the same exact position for another week or 2 weeks out, and it's going to give me and I'm going to sell to open that position for $6. What is my net? I collected another $2 in credit. So initially I'd collected on a 49 put, I collected $2.20. I rolled my contract out for another 2 weeks, collected another $2 in credits. Meaning if I am still in the money at expiration, rather than my shares cost $46.70, my shares now cost me $44.70. Because I got more credit. And let's say I take my assignment yet. I'll roll it again for another 2 weeks. And now I collect another $1.50. And I'll keep doing this until the stock breaks out of its downtrend and comes back up above my strike. And in the whole time that I've done this, I've collected more money. So now, 4 weeks after my initial expiration date, stock is sitting at $52 at expiration. Now I've collected 100% premium. I am now, rather than $2.30 initially, I have now collected $600 on that stuff. On that position, I have now made $600 versus just $200 initially. It took me time. It took me another month. But that's okay. I don't mind putting that leverage out there. That $5,000 was, that's cool. Use that leverage for another 2 months. Use that leverage for another month. I did this week with a 55 put on NEO.
Can you talk about the risk?
55 cents. The risk is very simple. You're going to get assigned shares if you expire in the money. So you have to have the amount of money required to purchase 100 shares at your strike price. So if you sold a 55 or a 50, you got to have $5,000 to cover those shares if they expire in the money. Because guess what? If it goes in the money, I can get assigned at any point in time. It doesn't have to be at expiration. A market maker or somebody else says, hey, I want to exercise their shares. I can be picked randomly and I can get assigned. It's happened before.
Well, there's actually kind of a queue based on the extrinsic and intrinsic values, right? So you're going to fall in order based on whose value lies where. It's impossible to determine where that is, though.
Right. I mean, we won't know. I'm going to feel like I got picked randomly. There is some kind of algorithm that determines who's going to get exercised. But just know this. When you go in the money, you can get assigned at any point in time. Don't think that you won't get assigned. The likelihood is very low. You know, maybe like 2% of the time you're going to get early. It's not likely to happen unless you have ex-dividend risk. that's something that Hostile can explain. But the likelihood is very little. But if I do get assigned, that's okay. I have the cash in my account to cover the position. That's the whole point here, is you have to have the cash to cover the position. If you don't have the cash to cover the position,
You're just going to take a loss.
All it takes is one screw up, guys. So when I say sell to open has more risk. But that more risk doesn't mean you're going to lose. There's a lot more risk on the buying side than there is on the selling. Risk on the selling side is assignment. I don't care for assignment. I'm okay with assignment. Give me assignment. Because if I'm assigned shares, I'm getting shares at a discount.
Hey, FaZe, are you Arabic, bro?
I am. Well, I'm Pakistani.
كيفك حبيبي؟
Alhamdulillah.
Alhamdulillah حبيبي.
Hey, so with that Neo, I got a contract, 44 strike price. I sold a put, expiring tomorrow. Obviously, I'm in the money. You're saying I should just close that.
What did
tomorrow.
you sell?
I sold a 44 strike, Neo.
You sold the 44 put on Neo that expires tomorrow. It's worth, what, 0.01 right now?
Yeah.
Why have you held for this long? What was your plan?
I didn't think I would be assigned. Just let it
When did you
expire
open the
worthless.
position?
This week.
Oh, okay. Yeah, you can let it expire, or you could roll it. I'd roll the buy. I had a 55 put. I received 55 cents. I rolled it out till the next week at the same strike for $1.05. The likelihood of Neo coming back down to 55, can it happen? Absolutely, it can. The likelihood is low. Roll it out to the next week if you're okay using that leverage.
Jason, we gotta take advantage of this, bro.
Or I can just close it at the same
Or you can close it. You can close it out at a penny.
Jason,
What's up?
what's good, bro?
Guys, if you're not actively involved with asking questions, please DM each other.
Jason, I'm gonna DM you.
Why?
You just said DM each other if you're not asking questions.
All right, guys, take that offline, please.
Hey, Hostile, can I
So
ask you
if I
something
let
quick?
it expire worthless, there's a possibility of me being assigned, you're saying?
There's always that possibility, but it's unless now, here's where the drawback is. If you do let it expire, let's say, for example, right after market close, Neo has some negative news come out and the stock tanks and drops down to 40 bucks randomly. And you thought that you were going to expire out of the market, and all of a sudden it dropped 24 points. I'm not saying it can't, it will happen. I'm saying it can. And we've seen it happen with stocks like Tesla before. All of a sudden, you're going to be assigned 100 shares at 44 for no reason. A lot of times when you juice that premium out to that extent, close out the option unless you plan on rolling it out. To me, it's not worth it. When you have that left just for a penny, that you're going to let it expire worthless. If it's going to cost you 60 cents or 65 cents commissions, I'm happy to pay that 65 cents because I've made so much more on the remainder of the premium rather than taking that risk for 1 penny.
Yeah, take the profit off the table sooner rather than later. Don't allow the market to take it back.
I'm also holding another one that's expiring tomorrow. It's Intel, 58 strike.
So I'm assuming that's probably close to a penny as well.
No,
that's at
that's
16
more.
cents.
It's how much? 50 cents?
16.
16 cents. How much premium did you receive initially?
126.
So you're a little over 90% at this point. So again, risk to reward, right? So if
I'm
you
at
get
87%.
95%, if you're at 90, 95%, 85%, risk to reward. Is it really worth the risk of holding it for $15? I don't know. I mean, you only you can make that decision. To me, no, it's not worth the risk.
Again,
I
especially
would go ahead.
in this position, your 58 put, the stock price is at 59.25. I mean, you're really close to the strike price.
Yeah, you're very close to it. In fact, what I would do is I would consider either closing it out right in the morning, because you have theta decay for you tonight. If the stock opens up higher, you're going to see it be even further lower. Worst case scenario, if you're really wanting to juice everything out of it, put a buy a close on it for like 0.1 or 0.05 or 0.07. I mean, you make that determination. But again, all it takes is one red day, and you're that close to the money. It's going to be, it's going to come right back down. All of a sudden, what you could have closed for 0.15 is now worth 0.46 or 0.49 or 0.86. All of a sudden, you're just like, shit, why didn't I close this sooner? People like Tilio love to play same days. They wait for that drop to catch support just so that they can buy it and ride it up. So why are you going to let him do that to you? Close it out. Take the risk off the table. Use the leverage elsewhere. At some point, you have to make the realization that, hey, I can use my leverage in another position to make more money than trying to juice out another $10 position.
Right. That makes sense.
All right. Let's move on to questions. I think there's a handful of people that wanted to ask.
I have a question.
Okay, go ahead.
It's kind of two questions. One of them is, is there a way to use TOS to scan for stocks that are coming into a squeeze? And then second, how do I identify that on the graphs and the charts?
So you can.
Hey, Hostile. Before you go on, I'm gonna go ahead and head out, guys. If you guys have any other questions, I'm Phase M. You can feel free to DM me. My DMs are open. I'm happy to answer any questions for you guys.
Thank you, Javier.
And
Thank you.
If there's anybody else who, if we want to announce this sooner for Q&A, Hostile for Sunday or for sometime next week, let's put an announcement out there. That way we can get more people to join if they're interested in learning about selling premium. Until then, I bid you guys adieu. Have a good night, and let's hope for a good day in the markets tomorrow, guys.
Alamak, Javier.
Thank you.
Thank you.
See you guys.
Later.
All right. So to answer Coco Mojo's question, you can scan for stuff, but I'm not sure if you can scan for squeezes.
Okay.
Are you looking at my live stream right now?
I am, yeah.
All right. So I think laser hat. Yeah. All right. This is a squeeze. All right. So let's see if I can go a little bit closer in here. All right. So squeeze basically means there's
Second,
three types of squeezes.
I think I have the wrong video up, I think. Where is your current one?
It's on my channel. The stream link is on my channel under education.
Okay, I'm on there now.
Okay, so basically a squeeze is you got the top side and the bottom side squeezing, right? So right now I got laser pulled up. The high, let me draw this out. Like this visually easy to understand. So I'm gonna draw highs with squares or rectangles, and then I'm gonna come back and do ovals. Right. All right, so this is squeezing down and up, right? So you got highs that are creating lower highs, and you got lows that are creating higher lows, right? So they're both squeezing towards one another. You see how that works? It's creating like a triangle here.
Right.
Right. So that's what I would call this a neutral squeeze. right? And one way that I would look at this and say, all right, which direction do I think this is going to bounce? I personally think it's going to go up because you have the highs are, I guess you could call them weaker than the lows, right? There's two other ways to see a squeeze. Let's see if I can find one. I think Tesla or Apple actually has one. Let's see if I can. I know Tesla did. I drew one on Tesla before.
Hostile, what do you think about Tesla tomorrow?
I don't know, man. It looks like it's going kind of sideways right now.
Yeah, it was a little choppy today.
Wait,
Hey, did you take my 1,000 call yesterday? That was a joke.
Yeah. All right, so this one's what I would call an upward squeeze. So right here you've got, let me draw this out real quick.
Wait, what are you looking at? Which stock?
Tesla.
Okay.
So you've got the lows making higher lows. Right, so I got this lowest low, and I got one here. It's higher. I got another one here that's higher than the previous. This one's higher than the previous. Right, but then on the top side at resistance, it resists at the same level. Right, so I basically have. Let me just. I got one here. I got one here. I could argue that this one is also, because it's so close. I got one here. All right. This is squeezing upwards. All right, so another example of a downward squeeze. See, I've already drawn this. This is BA. So I've got support levels where it bounced multiple times. All right.
Right.
That one right there. I kind of drew inside of a square, kind of hard to see. But then you've got the top side that's squeezing downward. All right. So this kind of, now because it's squeezing downward or upward doesn't necessarily mean it's a directional thing. It just means that there's going to be a breakout in either direction, and chances are it's usually up. All right. Now don't quote me, because it, the market loves to prove me wrong sometimes.
Mm-hmm.
Me too.
You can see here that it did break lower than that resistance level right here, and it continued lower, bounced back up, went sideways, went lower again, and then finally had its breakout and broke all-time high, or not all-time highs, but highs within 180 days, right? So squeeze, this is an example of squeezes. So, again, a downward squeeze, upward squeeze, and then a neutral squeeze. None of them are really directional, if that makes sense.
Hostile, can you look at open and see is it squeeze? Is that a squeeze? Open?
All right.
The thing I was wondering too is this type of squeeze, is that the same thing as a short squeeze, or is that like a different ballpark?
Totally different thing. Short squeeze is when short sellers are forced to cover their positions.
Okay. So it's kind of going back to what you guys are talking about.
Yeah, kind of. I'd recommend kind of looking up that definition. It's a fairly, you probably have to read the definition a few times to fully understand it.
I looked it up before and I just didn't understand it, but I'll look more into it.
Is that what happened with GME, or you read it on Wall Street?
I have no idea. No idea.
So is there any way that we can identify like shorts has to cover it, or is there any chance of a short squeeze? Is it any catalyst that act on it that breaks that made them to buy, or how can we? Is there any way to identify that any kind of data present in the market?
So you can go on. Let me see.
You can look up the short interest either in the command or there's places online, and then just watch the price action. And
here
if the buyers are taking control and the shorts are getting screwed, they're going to have to sell it. They're going to be like huge margin calls, and they're going to get screwed over. So
right. So let's see. Let me see if Tesla has.
And then you can compare the short interest to the open.
Was the run up that Kodak had a short squeeze?
Well, it might
What
have
is the
helped.
number we should look for?
I think it's short
yeah,
ratio.
Go to
short
FinViz
about
and you can look for
5%.
short interest and stuff.
Short ratio. Right here. This is on FinViz. You can also run. There's a command here on our Discord in the charting and commands. Short vol. So go into the channel right now on charting and commands, and I'm going to show you what command you can run to actually see a chart that shows you the short interest here. Let me think of somebody. AMD short vol AMD. All right, so this little chart that just popped up. You guys seeing it on that channel? Charting and commands.
Which one is that under?
It's the trade
Yeah, I
section.
can see. I can see.
So where the trade floor is, there's a charting commands channel.
Yeah, I see.
You've got green and red. The red is the short volume. Right? So you see at the top, there's a little key. Volume, short volume ratio. Right? So the short volume ratio means 0.37% of 100% is the shorters. Right? So this is one way you can look at it.
Yeah, BBBY is a good example. You can see that the float short percentage was like above 60%, and that it fucking went to the sky. So it probably made it go up even more, like people covering their positions.
Yeah,
like look at that pump.
In my opinion,
it
it's
went
more
up 18 to 27.
It's more clear on the charting and commands channel. You can see
So,
graphed out.
So here we saw the short ratio for Tesla around 1%, and in AMD right now also we saw somewhere around 1. So what ratio should be? Should be giving us an indication. Is it ever gonna be like 5-10 or something kind of that?
There's no way to understand the ratio and where it sits. The only thing you can do is look at it and tell how many shorters are in there and how many people are long. That's all you can do. You can't necessarily go in and, unless the stock price is flying and there's a lot of shorters in there, they're going to have to cover their positions, so they're being squeezed out. Does that make sense?
Yes. So the green ones are in that chart. Sorry, that the green ones are the longs, right? And the red ones are the shorts.
Correct.
Okay. Thank you so much.
You're welcome. So to answer the person's question about open, I don't see a squeeze here. This is not a squeeze. Okay. There were a handful of other folks that had questions as well. If you guys want to go ahead and speak up, I don't know who had the questions.
Can you do Zoom TA?
Zoom just broke most recent resistance. I think it's going to potentially, I mean, it definitely hit a strong support level. So I'd expect this one to, I mean, it did bounce. It broke recent resistance. So let's look for it to test 410 next. Either 410 or somewhere around, well, shoot, it's at 383 already. You want to see it hold this area and not drop below, and retest or start testing 405 area, 408. Let me zoom in a little bit more. $409. So you want to see it start to, I think you'll see it start to test 409 as long as it holds the level that it's at. If it drops back below, then you're going to start seeing resistance points on support, right? So this right here, this is support, this area. If it stays above that, you're going to see it test 409, 410. But if it drops back below this point of 380, basically, then it's going to probably travel in between this little area. Okay, who's next?
Do you think Solo will test 16 area anytime soon?
$16? No.
I think 10 is a little more realistic.
I'd say 9 is where you're looking at. Wait for it to hit 9 before you start asking it to go that high. I mean, does this thing even have?
I think 16 was their listing, but it came down.
So here's one thing that I'm noticing is it had a gap that just got filled right here. Right, it just filled that gap. It's going to have trouble going back up to 16, in my opinion. It's going to probably want to test. Let's go back closer in.
6 is strong.
6 is strong. What, support?
Yeah. Might come back down and bounce off again.
I don't see it going that low. Yeah. I mean, I don't know. Let's see. Stock's only been around for, let me go back. Yeah, it's only been around for 3 years. It's definitely hit a really low low. Bounced back up, filled that gap that it made 2+ years ago. I think it's in an uptrend, but 16 is still a ways away, in my opinion. I don't even know what this company does.
It's an electric car. They got a lot of hype right now. I might go up to I'm shooting for 10 or 12-ish for this if it pumps again right here.
Are you talking about Solo?
Yeah.
That's what I thought. Yeah, it's a Canadian EV company.
Yeah, I'd say you're going to start seeing resistance around 10 and change after, if you can get through 9. If you get through 9, then you're going to see it at, let me zoom in more, get a better idea here. So after it so if it breaches $9 and change, 913, I would look for 1060, 1140, and 1230. You got multiple resistance levels before it goes back to 16.
Yeah, they have a sports car model. That's probably going to be the next thing that pumps it.
Could be. I mean, it looks like it's holding pretty well though at 6. I don't think it's going to go back to 6.
You guys think Solo shares? Or not?
Yeah, I have over 100 shares on it.
And shares are safe. So
I feel like I should invest in some shares of Solo.
Shares are a lot safer. Now, the one thing that concerns me is how low it was just recently.
Yeah.
You know, down here
That's where I bought
under
him
a
at.
dollar.
Let it come back down to 6, and then buy him.
I mean, at a dollar, you know, that makes me nervous. Wasn't even. I mean, shoot, it was at $2 before COVID. Went under a dollar after COVID. That makes me
Not like
nervous
yeah.
because it could quickly go back down there, right? I mean, chances of it doing it, I don't think are high because EVs are pumping right now. But you know, I wouldn't rule it out. Let's say that.
Mm-hmm.
All right. Next question.
What about that new IPO, or PIPE or PIPP? The defense.
This one? Is this what you're talking about? Pine Island?
Yes.
I mean, there's not a lot of data in there for me to analyze, unfortunately. I got an uptrend. But, you know, with all IPOs, I'm almost certain that majority of IPOs, when they come out, they double and then they fall. So like in this example, maybe you'll see $20 and then it tanks back down to $9, right? RKT is a good example. So RKT came out and it did a nice pump. Right, it went from 17 to 34, doubled in price, then came right back down to the $20 area, right? So, you know, keep
I
that in
think that one
mind.
has a lot of hype with Biden.
What's that?
Yeah, I think it has a lot of hype with Biden.
Which one are we talking about again? The PIPP?
Yeah.
Yeah, I don't know. I don't know what is it? What's
I
this
heard it
company
has
do?
something with defense. I've been hearing a lot that it has to do something with the president-elect.
I
Yeah, I
don't
could be
know.
wrong.
You should research it
Yeah,
before
I
looking at it.
recommend definitely looking into it more before you throw money at it.
Hey, I had a quick question, Hostile.
Okay.
How did you get that short volume interest on that charting and commands?
So you type exclamation point short VOL space the ticker symbol.
Okay, thank you.
You're welcome.
I have a question. Can I ask?
Sure.
I was looking at two charts, KBH and LMPX, and they basically like respect this support, right? There's a support level that they both respect, but my question was for KBH, like, is it worth playing that support with share swings because there's a lot more like how do you say there's a lot more downside compared to LMPX.
When I look at downside, I look at the drastic movement of the stock, not necessarily the price. All right, and these charts look really close. Right. I mean, if you look at this, what is it? LMP, what? X?
Yeah.
I mean, they look almost identical as far as from the bottom to the top and then in the middle. I would probably go with this one just because it's something you can afford versus the other one.
Okay. Okay, so they're both worth trading at that support level, right?
I didn't say they were worth trading.
Okay, not worth. Okay, but like it's like
These aren't two tickers that I am particularly interested in, to be honest. But I'm not saying that you shouldn't do it. I'm just saying that it's not something that I'm paying attention to, nor would I because it's not worth my time. But maybe it's worth yours.
All right, guys. It's Ramsey. I gotta head out.
Night, beautiful.
So
Thanks,
what
Ramsey.
makes it worth looking at compared to not worth looking at for here?
That's just not a stock that I care much for. It doesn't have too much volatility. It's not moving all that much. I mean, it's range bound between 31 and 37. That's not a lot. And it did breach above it a couple of times. I mean, let's look at the whole entire time frame here. I mean, it's a slow moving stock. I don't care for slow stuff. I like volatility. That's where the money's at. All right, this is slow. This is like AT&T. It's just money languishes. It just sits there. It'll gain $5 here and there. It's trash to me.
All right, I see. Okay.
All right, who else has questions?
Hey, I have a last question. I'm seeing like a lot of spy sweeps in our sweep alert. So what does that? It's basically the put for 29th of January. So how does we see like what it indicates if you're having a lot of sweep options?
Sweeps just means a large amount of money going into a position, but you don't know if it's puts or calls. You don't know the direction based off of the sweep. You just know there's a lot of money hitting that strike. That's it. In my opinion, it's worthless, and I think we should remove it off the server. That's my opinion.
Yeah. So it doesn't mean that it's giving you any indication. It might be someone will buy at that price and will sell it, and then again
Right.
will close the position. Correct?
Yeah, you don't know if it's someone selling to open or buying to open that position. All you know is that somebody's getting into that strike. That's all you know. So you don't know if they're hedging. You don't know if they're.
Yeah, it sucks ass.
Yeah, it's. I think we should get rid of it. I've honestly kind of pushed to get rid of it, and not really sure where it stands. But I get this question often, and there's no real data that you can get out of it other than somebody getting into that strike.
What
That's
what
it.
is it that you think is bad?
Sweeps.
Sweep indicators.
And what about blocks? Both are same. I mean, similar.
What is it?
I see like a lot of block trade for the option price.
Blogs?
Block trades.
Oh, block trades. Oh.
Yeah, essentially the same thing. But
Yeah.
again, you don't know if they're hedging, if they're buying a shit ton of puts because they're super deep in calls, or vice versa. Or, I mean,
Yeah.
you still have to do your research. Look at the chart. You can't just base it. It's another tool at that, but you need to look at the chart and see, like, okay, is things going down? Is there a multiple of these throughout a few days or whatever, versus just like, oh, $2 million in puts were bought at, 25 strike on SLV or 20 strike SLV. Does that mean it's going down? No. Maybe they have 5 million and 27 calls and they're just hedging, and then they'll hold it until they don't need it.
Yeah, the only difference between a sweep and block is a sweep, they were able to execute their entire order, and it's a large order, whereas a block, they've got too much to execute in one order, so it throws it chunks at it. It's still probably the same order. Could be.
Intel.
And last question from my side would be, you're charting for 180 days, 4 hours. That's like I mean, we should start as basic, and I see these lines. I mean, what kind of indicator this? I mean, purple line, green line. So what kind of indicator is that?
So to answer your first question, I look at multiple time frames. So I look at 30, 60, 90, 180, 1 year. Those are my main charting time frames. As far as those lines that you're looking at, the purple, green, tan, gray, that's the standard deviation channels. So do you know anything about standard deviation?
I never used this indicator. I tried for Fibonacci and others.
Well, just for a second, remove the idea of it being an indicator and just ask yourself, have you taken a statistics class that teaches standard deviations?
Correct. That's I've learned that.
Okay, so you know what the bell curve is?
Correct.
The gray line is the top of the bell curve. The purple are the very extreme outliers. Follow?
Thank you so much, man. Thanks so much.
I couldn't hear you. I heard a screaming child.
Thank you so much. Thank you so much.
Okay, so you understand what it is now.
Yes, and I'll do the research right now. I mean, after this class on that.
Okay, so I have a video again on my channel that goes over standard deviation channels, what they mean, what each channel means, how to set it up, and also how to set up a scanner to find you stocks based off of those deviation channels. Those are two separate videos. The scanner is a separate video from the indicator video, but they're both there on the pin tab.
So, okay. It's on the Professor ST, right?
Yes, under education. That's correct.
Thank you so much.
You're welcome. Okay. Who else?
What are you looking at for tomorrow?
Do you? I'm sorry.
No, I've got a handful.
If you don't mind looking at ET at some point.
Sure. I don't have a let me rephrase. I have a handful of positions that I'm in right now that I want to get out of. I've got my watch list here that I scan through every day to see, there's multiple things in here that I know price levels without even having to look at the chart. All right, so, like pets, I know I like at 29. NUG I got a position that I needed to go over 71. Right. I like Neo down under 50 or under 55. I like Netflix at 480. I like Moderna at 75. I like MO at 36. I like Met at 42. I mean, you see where I'm going. I like JMPR at 21. I like HAL down really low. It's overextended right now. I like Fastly at 80. I like Exelon at 35. I like DKNG at 48. I mean, I could go through this whole entire list and tell you the price levels that I like for, a lot of these stocks. I like Workhorse at 20. So that's kind of how I look at this. Like, I don't necessarily have to go in and look at the chart itself. I can just look at the price here and determine, okay, this is probably something good I want to get into. This is the only time I actually go to it, like PLTR, right? So I'll go look at PLTR. I'll say, all right, prior to market close, because it looks like it jumped after market hours. So right now the option chain is only showing right at market close. So assuming this kept going sideways and didn't rip like that, I would have wanted to maybe potentially get into it tomorrow at market open. So then I would go in here and say, all right, how much are my options worth? Actually, it is showing that. Interesting. But assume for a second that the price hasn't jumped and this is the average price. So I'd look at this and say, all right, it's going to pay me $228 in 8 days. That sounds like a pretty good premium to me. Let me do some math. All right, so 228 divided by 2650, that's 8% return, or 8% money on what I have leveraged. I like that. That's good enough for me. Maybe I want to go 2 weeks out. Well, it's paying 300 now, right? So 300 divided by 2650, Now it's looking at like 11.3% return off of the leveraged amount of money that I'm using. So that's kind of what I do here. If I do find something at a price level that I like, I'll go in and analyze how much premium I'm getting paid. Kind of look at support and resistance levels to see where exactly it falls. But that's how I determine what stocks that I'm interested in, or what I may get into or potentially get out of. See, somebody said ET.
Yes, sir.
I don't particularly like stuff under $10. But this it's having trouble at resistance. This most recent resistance. I'd hope, if I were in your shoes and wanted to get into this or get whatever you're doing, I would hope that, assuming you want it to go up, it needs to breach the 734 area. And it's tested it once. I might test it again, but you want to see it break above this, and then it might make some kind of run it might make. You see, it's got another resistance area right here. So you're looking 725. Next resistance level is going to be 747. So there's not a lot of room in between where it's at and where it could go. But once it breaches 747 area, then I would say you're looking at shit. Even there, 779 is not that great either. So there's a handful of resistance points from where it's at until it reaches at least 864. Then there's nothing in its way from there to 973, or somewhere up there at $9 and change.
All right, thank you.
No problem. All right. Anybody else?
Question for you.
All right.
So I took a couple of interesting hits this last week. I've been messing around a lot with Snapchat with that volatility. I was in on it a little bit earlier, and I think about a week and a half ago, I lost about $1,000 on that. So I learned from that because I pulled it and I didn't average down like I was supposed to. And then on that laser call we had yesterday, I had thought I had placed an order for a put, and it was a call, and it flipped around on me to like $40 once it took that like latter end of the day downfall. And long story short, right now I'm at like $400 buying power. If you were in my position, what would you do to get your buying power back up? Because I'm coming from almost a $2,000 account. It's just really been an interesting month. What would you do with that?
Well, no, first thing that I would say is, what are you doing wrong to lose money? And when you determine what you've done wrong, don't make that same mistake again. Second thing that I would recommend is stop buying options. Start buying shares at $400 account.
Okay. All right.
And that way, if it does go against you, you're not losing money anymore. Your account's not zero. You keep buying options. If you keep going that direction, the likelihood of you losing all of it, it's a 50-50 chance in my opinion.
I'm not a pro, but I have a recommendation too. Bottom fishing, like kind of trying to buy like shares also on like strong supports. Like obviously a stock, it has to rest, so just try to get the shares at the very bottom and be patient. Set your alarms, like set a fuckload of alarms on like TD if you use TD.
Yeah.
It's super underrated.
Okay.
That's basically what I meant by buying shares.
Yeah.
Okay. Because I usually go by like the 50-50 rule. I don't go over 50% of the account for buying power. I hold 50% of it, and then the other 50% is free play. So what would you recommend, like sticking 50% into shares and then the other 50% or 25% to stock options?
No, I would say 100% into shares.
Okay.
Until you get to 10 grand.
Okay. All right. So you have any good so TD is what was mentioned before. Anything else?
You talking about tickers?
Yeah.
And I think he was referencing TD
TD
Ameritrade.
Ameritrade, just like you can set alarms. I don't know what you use.
I use Webull at the moment, but I'm
Cool.
transferring
Should
over.
be alarms there though too.
Yeah, there are.
Um,
Okay.
Look on the staff share buys. That'd be
Okay.
a place to start for sure.
All right, sweet. Thank you so much.
You're welcome.
Can you look at JMIA?
Jamia. I'd wait and see what it does at its resistance point. I mean, personally, I don't like touching anything at highs. I like getting everything at the bottom. I'd like to see this one fall back to support, around what, $30, $33, $34. Then maybe get into it. I don't like stuff near highs. So let's say, for example, I'm gonna give you an example. Let's say this thing gets to $50 and it rips to 60. Wait for it to fall back down to 50, or wait for it to fall somewhere back down to its most recent high. Typically, when something breaches a high and it goes past it, it's going to use that most recent resistance high as a support level. It's paying pretty good premium though.
Yeah, this is one of the calls earlier this week, and I have 2 remaining contracts that expire tomorrow at the 50 strike. They're just runners at this point.
Are they worth anything?
Right now, 41 cents.
Ugh. Never ever hold a position till expiration unless you're selling to open. If you're buying to open, you need to be out of that thing as quickly as possible with profits. Let's say that.
Yeah, I'm planning on closing tomorrow.
Yeah, never ever hold something that you bought, paid a debit for, till expiration, because it'll be worthless, basically. All right, who else?
Right.
Intel.
I would be very worried about Intel's earnings.
Right. That's what I was
Yeah,
thinking.
they fucked me over.
It filled. I played puts every time and came out, but they filled that two earnings ago? That huge gap got filled the last 2 days.
Yeah, I would
Earnings are
definitely
next
go.
week.
I'm going puts for the earnings. Fuck that.
Ooh, look at this gap. Look at
and plus that.
Actually, I'll just sell. I'll just sell calls. Fuck it.
Don't sell calls. It's better off buying puts.
It's not gonna pump. Well,
All right.
what about IV for earnings? Like, isn't that bad to play like earnings because IV?
Well, IV is probably going to increase with earnings, and you want IV to increase when you buy options.
Just when it goes too high, though.
It's
like
about a week out too. So, I mean, if you are taking that lotto on a ER, right now is about the time to get in before IV would
the crush
go up to get crushed in the long run. But yeah, I was looking at like 55 and then maybe some 53 puts, at least for the gap fill from the last 2 days. But just something to look at. I saw those 2 big gaps, one filled and one opened up. So
yeah, that looks
Yeah, it looks fucking really good actually.
This could pay really nicely.
The last 2 ERs did.
Get a bunch of them. Maybe go for.
I mean, so many people hate Intel like in the stock world, so.
Well, even like the 53s for the 22nd they're only $20. The 55s are like $45. I mean, I don't know, for a price like that, I wouldn't be too worried about
Which expiration are you looking at, VCAV?
I was just looking at the 22nd. Earnings of the 21st. I know that's not the ideal play, but I think in that situation, as cheap as they are right now, with it pumped up to 60.
Well, the one thing that I really like is buying debit spreads here.
Yeah. Also another value option.
You buy debit spreads and oops, not sell. Buy.
Why do you like the debit spreads more?
Because
just for like the hedge.
Well, it's not necessarily a hedge. I mean, so you don't want to buy you don't want to buy a put on the 22nd because theta decay is going to eat that put, right? The earnings are on the 21st, whereas and it costs 100. Let's say you get at the money put, it's 100 or 200 bucks. I can buy debit spreads for $50, right? And they're not going to. I need theta to happen. I need theta to decay with a debit spread. So once theta does its thing, and then it pumps in the direction I need it to, I'm not going to take as much of a loss on
Oh, that
theta.
makes sense. You're protecting yourself
Yeah.
with the theta. Okay.
Right.
And you could still like stock up on the spreads too to like get as much profit.
I mean, because like if you look at this, let's
What
just
are you
go
looking at?
at the
February?
money.
Yeah, that's badass.
No,
I'm gonna bring up the calculator on this.
January 22nd. You said 21st was earnings, right?
Yeah.
All right, so I get a shit. Hold on. I keep doing sell. So it's showing a $48 premium that the max that I can make. I'd pay 52. The max I can make is $48, right?
At the money?
Yes. So if you think
I'm
about it,
seeing $37 with a max of 63.
On 122?
Yeah.
Sorry.
At 60 strike?
No, I'm at 59 strike. You're in the money. You're in the money when strike if you're at 60, which is fine too, honestly.
Well, it's 59.30 is the price right now. That's it goes. Oh, I see what you're saying.
Yeah, I mean
This price is 59.25, 60.
Right. I mean that's okay too, right? I mean that one is not a bad idea either. I mean when you're doing spreads, it's okay to throw one leg in the money and one leg out of the money. That's not an issue, right? I mean, yeah, you shoot. I'm showing less profit. I'm showing 43 on a debit spread. So let's just look at the 59.58, right? So if I buy 59.58, buying the 59, selling the 58, I'm getting $48 premium. Now, if you look at how much it costs you to buy a put here, it's 200 bucks. I can get 4 of these, right? So if I were to buy 4, I'm looking at $192 max profit. Okay, but if I buy a put here, and let's say it takes all the way till the 21st, and well, shit, it could drop hard though. That's the thing. Puts might pay really well here versus a debit spread, but debit spreads are cheaper. You got protection against theta.
Right. The only thing is collateral, which I know a lot of cash accounts. It's like 5,600 bucks.
Right. Yeah, so it's a lot cheaper to do debit spreads, and you protect yourself with theta, but you make a lot more money if you're buying puts. Because in my opinion,
Yeah, I was just looking at the 55s and the 53s.
Yeah, I mean, I think
they're cheap enough. There's like a $4.50, $5 price move priced in right now.
I mean, let's say that it does tank. It's going to fill this gap most likely. So 53.60. If we look at the analyze tab based off of the 21st, it hits 53.60. We're looking at $300 and some in profit. Whereas if I bought debit spreads at the money, I'm looking at 200. So this would be one I'd say, debit spreads may not be the best way to go because the put is still only $200. But if it's something expensive like Amazon where one put is $3,000, I can probably get one debit spread for $150 or something like that and still make money. So the debit spread really just allows you to get into a position for a lot cheaper and still take
What's the
advantage.
difference of the debit and the credit spread? I just get confused on.
Well, debit spread is you're being debited. You're buying to open a spread, right? And you need it to go in the direction that you chose. Whereas selling to open a credit spread, you get paid money to open that position.
Okay, that makes sense.
And you
Okay,
need
cool.
to go the other. You need a debit spread to go in the money. You need a credit spread to go out of the money.
Perfect. Yeah, that makes sense. So
But yeah,
put,
like
yeah,
even
put,
if you got
okay.
those 55s, and it did fill that gap to 53, that's like $160 a contract, and they were only what, $45 to get in piece.
You talking about debit spreads?
No, just straight puts.
Oh, right. Okay. Huh. I wonder.
And even if you didn't have to hold it until earnings, even. I mean, if it filled that gap before then.
Let's see what it looks like. So which one are you looking at? 55?
Yeah, the 55 put for 22 January. They're $47 right now.
Okay,
at
so
close.
let's see what a debit spread cost here. Ooh, $9. This looks a lot juicier. I could buy let's see, $9, 43 divided by 9. I could get 5 contracts to be a little bit more than be $45 for 5 contracts of debit spreads. 5 times 41. Oh shit. 5 times 41. I'm looking at $205 in premium off of $45.
For the right, I make the strike higher.
I'm sorry, what?
For the one I'm writing, I put the strike higher than the buy.
So if you're doing debit spreads, the buy needs to be the closest to stock price, and the short or the sell needs to be furthest away.
Okay. I always get that mixed up.
So in this scenario,
yeah, $9 for what? $40 a premium, $41 premium.
So we need this. So by expiration, wait, no, I wanted to do singles. I'm sorry. Single. How much would I get off a single? So let's say it hits $53. Looking at 160. So it's
Yeah, it's like 160, 166 for the single put.
Yeah, so we needed to hit 52, 56 to equal the debit spreads. If I bought 5 debit spreads, I'd make 200. If I bought a single put, it would need to drop another 50 cents for me to get the same amount of money. And the beauty
And
here
that's
is
These are different.
you can trim these debit spreads, whereas you can't trim one put. You can't trim that, but you can trim debit spreads. So if it's starting to fall, and let's say you see $20 on one, you can take it and then let the next 4 ride. Then they start showing $35 a piece. You can trim one. You got 3 left, right? And now you've essentially just paid for those 3 that are left. Right?
So you can buy to close on the way down on your ones you sold, like as it's getting closer.
Debit spreads require sell to close. So when you buy to open a position, they must be sold to close.
Do you have to sell the pair though on TD, or
Yes.
could you just pull one leg off?
I don't think you can separate
Okay.
the legs. I think TDA
That makes
won't
sense.
allow you. When you get into a position with the pair, I think TDA requires you to
Okay,
exit
makes
it
sense.
the same way.
Yeah, you could abuse that.
Yeah, it could totally
You
be
could buy them
abused.
separately, but
Yeah, you could definitely buy them separately. Then they would turn into a debit spread.
True, just like could get exercised in that case or assigned or whatever.
But I mean, in this scenario, you might as well just buy puts.
You think puts are better though still now? Then I mean, just buy them further out. Like it's gonna be more expensive, but
Well, then you're gonna get
for the
ID
theta.
crushed too for that. I wouldn't.
Oh, you would?
If I was personally like, I think I'm gonna take some, but it's more of like go in with it, risk losing it all or nothing, or getting a bunch really. But for $205, just same as this price, you could get 5 of them. If it does fill the gap to 53, that's 160 a contract times 5 for a $200 investment.
Would you have to? You'd have to hold through the announcement though, right? So you'd have to hold overnight.
Probably.
More than likely, if you're going to see that big
for puts, yeah,
that big dip.
See, and then in
But
that scenario,
it may fill that 53 gap before then though too. But the last 2 ERs of one was $5 and one was $9, moved down. So.
And the reason I like debit spreads here, based off of a certain or a specific time frame, is because you have that theta. Like the theta needs to happen for a debit spread to show returns, right? It has to happen. Whereas a single put option, buying a single put option, theta is going to hurt you. If that makes sense.
I'm thinking about the 50s though, like straight up was the 22nd too close? I mean, it's only a 2 theta, so I mean it'd be $2 times how many days?
So think about this.
7 days, that's $14 lost per contract.
The further out you go out of the money, the larger in percentage of theta decay. Right? You can look at the dollar amount, but that doesn't matter. What matters is percentage. So
you mean like, I mean the number's lower the further out, but you're saying the percentage. Oh, because
it'll be in the money.
True. Well, no, he's talking about like of what you bought it for.
If you buy a put at the money versus a put 10 strikes out of the money, the put 10 strikes out of the money has a higher theta decay.
Mine says $6 at 54, and then near the money it's $12.
Divide those numbers into each other and tell me what percentage you get. Here, I'll do it for you. Okay. If I buy we're gonna look at Intel, since we're talking about $200. Theta decay on this is $12, right? So 12 divided by 200, that's 6% theta decay. And
Okay, the price, okay.
If I go $50, like you're talking about, so $8, right? So $8 and theta decay is $2. Okay, 2 divided by 8, that's 25% theta decay.
Yeah, but I mean, like you're getting. I understand, like for the like that makes sense. But you're getting them for cheap because it's very unlikely. It's not implied that it would even make it to that. So, but I get what you're saying.
Yeah, and that's why I always tell everybody, if you're buying options, buy as close to at the money where there's open interest, because you're limiting the loss of theta. Right? You're slowing down the percentage of loss, whereas the further out you go, you're increasing the theta decay. Even though the dollar amount's smaller, you're still increasing the theta decay loss. Okay.
Yeah, it kind of makes sense.
Anybody else here got questions?
I don't know if you had any thoughts. If you had any thoughts about Facebook now that it's gone down a little bit from its, about I think it was getting close to $300, and now it's to like $245.
Is that support? Taking some big hits. I think it might have a chance here to drop below support, be honest with you. The drasticness of its loss. And it's had two 3 really big red days, although could show some strength. If it falls below that, next stop is going to be 230.
Yeah, and if you look at the daily, there's a gap from, well, where it's at now, 244 down to
Oh yeah, yep.
234. So it's got about $10, I'd say. And then my guess, if I was going to be bullish, I'd wait for like 230, 229 for a bounce there.
Agreed. Definitely. Anytime you see gaps like this and they're starting to come near it, I'd say it's likely that it starts to fill it. Gaps
But
are
then
really
once
important.
it gets to about that 230 range, then that's when it's really probably going to bounce off a little more if it is going to.
Well, still, you got to look for a support, right? And I would
For
say
sure.
support's anywhere from 230 to 222.
224. Yeah.
Okay.
Yeah.
So, what's your leaps on this thing? I don't like buying options the way most people do. I like buying leaps. Because at some point
That's
I
what I
show
would. Well, that's
profits.
kind of what I was thinking about for it. I didn't know exactly what would be like a good option though.
Well, if anytime you do leaps, I like when you're
Mhm.
out. Because
Okay.
you give yourself loads and loads of time. And any time between now and then, it's going to, especially if you buy a leap as close to at the money as possible, you will see profits on that very quickly within the next 2 months, 3 months. I mean, you could wait 6 months and you're still going to see profits on that position because it's going to come back up, right? And I think stocks swing every 3 to 6 months, right? So I would anticipate something like that to be the case.
Especially when you're
Okay,
buying
so
something
for
that's
something
already
like
had highs in the past. Like we know it can go to 306, 304. Like if you're playing all-time high leaps, that's where it gets a little different. But
Right.
you know it can go to 304 at some point again. It probably will.
Well, here's the thing too. I mean, if you play it off the sport, like me and VCAV are saying at 230 or 228 or 222 or whatever the number is, if you buy leaps right there at the money, guaranteed you're going to see profits within a month or two max.
for sure.
And that's when I would start taking them. I wouldn't wait any longer. You could sell it, wait for a small pullback, and then jump back into a leap and do the same thing.
For sure.
You can ride leaps up. Just wait for like a 1 to 2.5% drop from where it's at, or if it pumps more and then has a decent little retracement in a short time frame, that's when you get back in with leaps. You do it all the way until it hits resistance or starts coming near it, starts looking like it may test resistance. That's when you start jumping out. All right. Anybody else?
Yeah, I had a question.
Okay.
I mean, I see the gaps on the chart, but I was just wondering if you could explain what are the buyers and sellers doing like that causes those gaps?
Typically, it's just a huge movement in price. Let's see, that gap is in, what's that? January, February, March, April, May, June,
It's extended hours too. It needs to be filled.
July. So
Yeah, it depends on the time frame you're looking at too. Like most people look at the gaps on the daily chart.
Yeah.
So when there's like, say it closed at, what did Facebook close at? 245. Say it opens up tomorrow at 235. There'll be a gap on the daily chart. If you go over to 4 hour and below, you'll see the candle will still be there, but you have to go back to the daily chart and look and see that gap. However, if you look at 4 hour, whatever, anything below that, intraday, if there's a gap there, that's even a stronger indication of that gap.
Right.
That means that when the price closed at say 245, the next bid the following morning when pre-market opened was at 235, and the ask followed, and they started buying and selling at that price. And you'll see those gaps. I mean, you'll see them on 15-minute charts. You'll see them on any time frame, but those ones are going to be stronger indications because they're not pre-market, they're not after hours. They're just literally people saying, nope, this is too expensive. We're going to start buying and selling down here or up here, vice versa.
So let me show you what VCAV is talking about. So Facebook, the gaps that we're seeing are these big green candles right here. Right, these two green candles, you can see them here on the 184-hour chart. When you go to the 1 year, 1 day, you see the gap right here, right? You're seeing it right there.
Oh, you use other candle styles, don't you?
No, I went back to the other
You
one.
switch?
Yeah.
Oh, okay.
So
excuse me. Sorry, what are you guys talking about? What ticker?
Facebook.
Okay, thank you.
Hmm? So you're seeing a gap here on the 1 year, like VCAV was saying, but again, when you go into the 180, there's no gaps because the candles on these time frames show up. Now, what he's saying, when you go into a shorter time frame and you see a gap, that is an indicator that it's even stronger. And this is a perfect example on this
Yeah,
particular
I think you can
stock.
see it on Intel too. Yeah.
But this one here, I see a lot of gaps on this ETF that I trade periodically. You know, it had a huge gap right here when it pumped, right? And then it filled it within days later, right? Now it's at a bottom area, and it's a support area, and it's got this gap up here to fill. So at some point, it's going to come back up and fill it, right? So this is a short time frame. I mean, we're looking at a 30-day chart here, and it's got gaps, right? And then a little bit longer time frame, you see here it's showing this red candle. That when I go further out to the 1 year, you're seeing the gap. Oops, too much. You actually see the gap. There's nothing in between there, right? So at some point it's going to fill this one too in the future, right? Because it's down here. First needs to fill the small one, and then at some point in the future it's going to fill this one, which is why I'm bullish on precious metals. One of the reasons why.
Nice, thank you. Actually bought some gold shares or gold option calls today.
Like Barrick Gold.
Yep.
I got a limit order in for that, waiting to get filled for a leap, mind you. This one here, what's my I got an order in for 230, so it's $25 away from my order. So I'd like to see that one get filled right there. So it came close.
Nice. I
3 days
grabbed
ago.
the March 30 calls, I think.
Yeah, with precious metals, man, I really like to give it a lot more time because PMs have really proven themselves to take time to turn into something. So that's just kind of how I look at it. I don't particularly like doing anything short on precious metals. They take so long to move in the direction I need them to. Other than ETFs. ETFs, they usually move decently quick, like NUGT or I think JNUG or JB. Let's see, JNUG is up. No, JB and JB. Shit. Was it?
Yeah, I've been watching that one too.
Is it fuck, what was it? JNBT? Shoot.
I know JNUG.
Yeah, JNUG is. Oh yeah, JNUG. This one is the one that pumps up when the price of PMs goes up. There's a inverse to JNUG. I can't remember what it was now. I'm gonna go find out because it's gonna bug me if I don't inverse to JNUG. JDST. So if you look at JDST, super low. This is an inverse, so I'll mess with inverse. These things usually reverse split. Stay away from those. But JNUG is gonna be, it's gonna probably pop soon. Let's see.
How do you feel about JETS?
JTS?
JETS. Sorry, it's an
Oh,
ETF as
Jets.
well. Yeah.
I don't know, man. I don't like airlines. They're sketch, in my opinion.
That's how I was just looking at the previous price points and stuff like that and what it's been doing this year, but like you said, airlines are just kind of iffy.
I mean, look at, there's a gap here.
Oh, big gaps.
That's a gap right there. So I didn't honestly anticipate this falling down at some point in the future. Leaps on this, pretty cheap. I don't like going against the market. I don't like being bearish necessarily. I like to get everything at the bottom because, again, like I was saying before, the market is bullish long term, right? Unless asteroids hit the planet or we start having nuclear war, stocks are bullish long term.
For sure.
So I just wait for retracements, jump in, go bullish. You know, if I got to get year leaps or, you know, I'm selling cash puts, you know, either one. All right. Anybody else?
Thank you.
You're welcome. Probably going to call it a night here shortly, unless somebody else has any more questions.
If you don't mind, just real quick, can you? I have a decent idea of like the Greeks and stuff like that, but can you just go over how the gamma and the vega affect the contracts?
I actually have a really solid video you should watch on my channel.
Okay, that's perfect.
Education section under Professor Hostel channel. That's one of my most recent videos that I made. It's called Option Greeks. It's pinned.
Okay.
So that one's, I think that will really, that should totally answer your question about.
Oh yeah, no, I'll go watch that as soon as we end it, for sure.
Enrique, I think you had a question.
No, I was just gonna say I had a mean earthquake in the middle of asking you that question. It spooked me.
Oh, weird.
And
So what do you think about?
There was two of you.
Oh, sorry. What do you think about Zoom?
I think I went over Zoom earlier, but Zoom is at support. Again, it's at support and a resistance level, in my opinion. So it needs to stay above where it's at. All right, there's a support level here that's acting as resistance. It needs to stay above it to stay bullish. It bounced from a support level. So, I mean, I think it's up from here, to be honest. It's at a low, comparatively speaking.
Yeah.
And, you know, you've got multiple, another pretty good support level over here as well. So, I mean, I think it's a good place to get into. I mean, I wanted to buy leaps on this, but it's expensive, so I didn't. I mean, you know, looking at 10 grand at the money almost. I could guarantee you that would show a $2,000 or $3,000 return within the next couple of months, easy. If you had $9,000 to throw at it.
Yeah.
So once my account grows to 500K, I'll be doing quite a few leaps and stuff like this. I mean, this is a no-brainer in my opinion. BYND was a good one. All right, I mean, this one fell down to a low, and you know, it cost. I mean, I actually had 3,000, but I was trying to get into cash puts, so I didn't do it because I didn't have enough for the cash puts because I needed, you know, 10 to $15,000 to do it. Let's see, Baba was another one that I wanted to do leaps on, and this one's $4,000. You know, not really. And I try to stick to rules, right? 5% of my account value, or I'm sorry, 5% per trade, no more than 50% of my account. This would have probably been a 25 to 30% of my whole account had I bought a $3,000 or $4,000 leap. So I try to stick to my rules, even though I know it's going to do well. I mean, it's just dangerous to throw that kind of money at it if it doesn't go your way. You know what I mean? So I know these are good plays. Just got to stick to the rules that I made for myself.
What do you think of NVIDIA being low right now?
I still think it needs to come down some. I like it at 509 area, 510. I'm bullish. Yeah, for a bounce. I'm bullish on it, to be honest. But so I drew out this trend line, and it kind of broke it, right? So that makes me it's in neutral territory right now. So I wait and see what it does at support. Right, if it breaks through support, I wait to see what it does at the next support level. If it breaks through that, then we're going to see some downside for sure. And I think the market is overdue for some downside.
It's like it's been going down for a little bit now. Well, NVIDIA has.
Well, I mean, not really. I mean, it's sideways, right? It's been going, it's been bouncing off of this 510 area and kind of in between. So it's in between 510 and 550 area roughly for what 2.5 months now. I mean, that's some consolidation movement, honestly, because if you look at the percentage movement in relation to the stock, it's probably not much. 2.5 to 5%, if that. I mean, what's $50 from, let's see, 550 and what's that? 509, 510. So in between 550 and 510 would be what, 530. So 530 with a $50 movement, 50 divided by 530. Well, that's like a 10% movement, but deviation rather, 10% deviation from the high to lows. So you're probably seeing a 2.5 to 5% movement in the stock in either direction at any given point, and that's not a lot, right? If it's doing 10% movements or 15% movements, that those are runs or retracements.
Thank you.
You're welcome.
Hostile, real quick, wanted to ask you what you would have done in this scenario. So, about a year ago, I sold puts on Tilray, and they were assigned to me. And I kind of, like you and FaZe were talking earlier, I kind of just started selling calls on it. I didn't mind it getting assigned to me. At that point, it was 750, the strike price.
What's the ticker?
TLRY. So I was doing this for months, selling it. It wouldn't, selling calls. It was always out of the money. So I just kept the shares, kept collecting premium. And then came November. I'm not into politics. Didn't see the election going the way that it did. And I didn't think it would have an effect on cannabis. So I ended up in a position where I sold a call and it was going to get assigned for less than what it had been assigned to me for, the 750. It was for 650. So I kept rolling it out. But then I got to the point where, because the price went so high, I couldn't roll it out further without me having to pay the debit. obviously hindsight is 2020, but I didn't think that it would pump for this long. Would you have done it the same and kind of just given up, let the shares go, expecting it to maybe dip and buy them back? Or would you have kept rolling it out?
I would have probably tried to keep rolling it because you can. It depends, right? I mean, I
Even if
always
you had to
say
pay the debit
no,
at that point?
no, never ever pay debits. I would say
You see, because
to
I could keep rolling it over, or I guess that's what I would want to learn. I could keep rolling it over at the 650 level because that's what I had sold the initial strike for, and then it pumped to like $9. So I rolled it out a week, and I kept doing that, but I couldn't get it to the point where I could at least get to the break even, the 750, without me having to pay.
So again, I would always roll up one strike to the nearest expiration that pays debit or that pays you money, right? And so you got to look at time frames. Is it going to take 2 weeks? Is it going to take a month? Is it going to take 2 months? Right? That to get credit for that position, and you got to weigh out your options. Like, is it worth it to you to continue to hold those shares in case it comes back down? Right? So like, let's say you got to do a 2-month contract to roll it up a strike to say $7 from 650, and it's paying you $50, right? So that's basically your break even from your assignment at 750, right? Is it worth it to you to hold those shares? So you got to kind of weigh that choice out. But in this scenario, you always want to roll out one strike in the direction of the stock price if you're in the money, and go to the nearest expiration that pays credit. Now, sometimes, I mean, in this scenario, it pumps so high to $20 or almost, 17 plus $18. It's impossible to roll without paying debit on that. Impossible. So one thing that I would tell you is never ever sell a position against shares. Never ever do a covered call against shares that you got to sign. So, sorry, let me back up. If you got to sign for 750 and you're selling a covered call in those shares now at $7, you're taking away your profits and potentially losing money. Always sell at the strike that you got to sign, never anything less. Right? And that way you guarantee to make the premium that you were paid plus the premium you just got paid. Right? It's a guarantee that you make money. Whereas if you sell it for less than you got assigned, you're cutting into your profits.
Yeah, and what had happened at that time was that it kind of hit a bottom where after assignment, I think it got to a point where it was at $4 or even $5. So I was, to your point, I definitely was selling it under profits, but because of that expectation of it not getting assigned, I kept just collecting the premiums because at 750, the premium was a penny at best.
Yeah, in that scenario, you just bag hold, right? I mean,
just hold the shares straight up, don't sell calls on them.
Yeah, wait till it comes back up closer, or even sell more cash secured puts at it at that low price, right? I mean, if you're holding shares and you're okay with it, and you think it's going to pump, you think it. I mean, you sold CSPs on it, being okay with owning the shares, so getting assigned at 750, it's even better when you get assigned under 5. So why not do it again if you're willing to own the shares? And that way, you take in the premium guaranteed. And so you're basically at this point holding shares that you got assigned. I don't know what your premium was, but that minus 750 is what your break even is. And you're selling CSPs now at really low lows. And you continue to sell CSPs at really low lows until you get up to that area where you can start selling covered calls on those shares. And you roll them shares out, or I'm sorry, you roll the covered call out. Once you get to near where you can start selling that 750 strike for decent money, and it goes in the money, you can roll it weekly and take in small premiums, and then once it does a rip like it just did this month, or this past month, that's when you let the shares get called away.
That makes sense. I appreciate that insight. Thank you.
You're welcome. Okay, anybody else? All right. Well, since no one else has any questions, I think I'm going to end it for the night. Thanks for you guys showing up, asking questions. To see y'all next time.
Thank you. Have a good night.
Thank you.
You too.
Thanks, Hostile.
Thanks,
You're welcome.
Hostile.
See you later.